This is the briefing for Friday, February 20th. Well, we had a little bit of volatility in today's trading. Basically, when the Supreme Court came out and struck down the current tariffs, the way they're being administered, or the law that they're being administered under. And then, of course, we lost all the gains that we made. So it's really, this is just a very, very tough market to trade in right now. This is a daily chart of the spiders. And you can see this is today's trading. We had a decent day, but when you look at the short-term charts, it's really not as positive as it was on a daily chart like this. Volume is up slightly in the spiders. You can see that 52-week highs minus 52-week lows are still trending down, as is market breadth trending down, and as is net volume. So in last night's briefing, and really for the last several briefings, I've talked about the fact that we're in an area of rotation in this time frame and in this time frame, and sometimes in this time frame here, and you can see that even right through here and right through here. So breaking out of that area of rotation is going to take strengthening from the internals to support that. And the alternate to that is also that if we're going to go to the downside and break out to the downside, then we're going to need to see the internals weakening more than they are right now. So right now, the internals are basically flat, really not giving us any indication of a move or a breakout move in either direction. So, and you can see that when we get to the overbought and oversold indicator, you can see that is basically flat in neutral position right now. So it's not giving us an indication of an overbought or oversold market. That this is a market that is just really unsure whether value is higher or lower. And the same thing with the Qs. You can see the Qs in this area of rotation here, and then in this area of rotation here. Came down and tested the 600 area in today's trading, bounced right off it. The news from the Supreme Court certainly helped in that. You can see volume in the Qs ticked up slightly today, but it's trending down. NASDAQ breadth is trending down, and net volume in the NASDAQ is trending down also. So really, even today's rally that we saw above yesterday's high, not giving us any indication of really good strengthening within the market itself. IWM, rotational pattern here, rotational pattern here, and then a rotational pattern right through here. You can see that this is amazing to see the buying and selling tails that occur on all of these candles. That is just a sign that neither buyers nor sellers can gain control of this market. Volume trending down in the Russell. Breadth kind of mixed in the Russell. You can see that here. In fact, you look like it's trending up right through here as opposed to the other indices, but net volume trending down as well. Looking at the shorter term aspects, these are hourly charts of the spiders, the Qs, and the IWM representing the Russell. So if I went back in this chart, you can see there is another rotational pattern up to the 695, 696 area, and then back down again to the 676 area, back up to the 690 area, back down, back up again. So you can see the multiple time frame rotational patterns that are in this market right now. And you can even see volume in the spiders declining with each passing day. Now today, based on the release from the Supreme Court, we did have a spike in volume, but for the most part, volume is not increasing in the indices right now, and breadth is basically muted. S&P breadth, 164 shares positive out of 500, 251 shares positive out of the NASDAQ, and 265 shares positive out of the Russell. Really not a whole lot going on in terms of this. Now, short term, if we break above the 690 area in the spiders, that's going to open up a potential test of 697. Of course, we could see a rotation back through the range, testing 680, and if that's broken through, we're going to see a test of 676. And then we have to go to the daily charts to look at the longer term key reference areas to look for support and resistance. In terms of the Qs, 610 breaking above that's going to open up trading up to the 618 area, rotating back down to 600, trading through that's going to open up 595. And then, of course, the Russell is stuck in this range also, with an upper extreme of 268 and a lower extreme of 258. So really not a whole lot we can do on the short term. If you're day trading, trading above the upper extreme here that I just outlined is going to suggest potentially that you're going to see a test of these longer term, intermediate term, I should say, key reference areas. And it could be potentially a decent day trade. Looking at the overbought and oversold condition, once again, we are neutral, and you can see that we've been in this area for quite some time in the NYSE. Same thing with the NASDAQ. You can see that we are neither overbought nor oversold. We're basically neutral. The indicator is converging together, which suggests a tightening in the market and the potential that we're going to see potentially some type of breakout move. But the key to that, and I really want to emphasize this, is breaking out of these areas here is going to mean you're going to want to see the internals increasing. In other words, volume increasing, breadth increasing, and net volume increasing as well, because you're going to need gas to sustain a rally, and that gas comes from the internals themselves. Have a great weekend, and I'll pick this back up again on Monday for subscribers.